Hi everyone, it's Rich with Thrive and Survive Rebooted and theedgeoftruth.com. These are all going to end up on the Edge of Truth eventually, and that's where I'm going to update. Try to get used to it, guys. And I apologize again for not having an update last week. It was a rough week for me in a lot of personal different ways. So anyway, hopefully that is sort of in the background now. We can just move forward. And some interesting stuff here. We're starting with the S&P 500 on a daily basis. And what we were looking at last time was about the last part of this red line, or actually around where wave 3 is indicated right here. And at that time, I was conjecturing or trying to figure out if we were going to get the S&P 500 to come back up, hit this line and bounce off, and then maybe this would be our wave 5 high. We have surpassed that red trend line. This is typical actually at market tops. It's called a throw over. And what we would expect then 2-3 years from now, whenever we get down to around S&P 500, there'll be a little uptrend, and then you would have a throw under there, which would indicate the bottom of the the bottom of the market at that point. That's many years away, and we still haven't confirmed a top here. So let's look at where we think we are at the moment. I want to point out something right here in the momentum studies. If our count is correct, our wave 3 was here, wave 4, and now we've either completed wave 5 or we have one more push up to go. Now, this 2132.50, I believe, is the number, which was the actual high back here. If we exceed that, our count is wrong. This would be a 100% retracement, which is the most allowed in this count. This is not a running flat, so we can't exceed this, I don't believe, and have any way to justify our current count. We'd have to look at something different there. In any case, I think we are going to be just fine, and that's what I'm talking about here with this momentum. With this wave 5, I can count at 1, 2, it looks to me like 3 is what happened last Wednesday, and we've fallen back now a little bit. I expect possibly, we could be done here at wave 5, but possibly one more push, which may exceed or truncate or equal last Wednesday's high. But again, if we pass 2132.50, I think is the high right there. If we pass this dashed line, we have invalidated the count. We got to really look at all this over again. What I'm expecting now is if we haven't finished the top, the bear trap warning is still in effect, then we are going to start tumbling down in a 1, 2, 3. The wave 3 would be pretty massive. This would be the big wake-up call to everybody that they are indeed trapped if they are long the stock market. It's interesting to note that the short term is bullish, which is doesn't give you the anything but like a daily, what you would expect in the next few days or a couple of weeks maybe. The intermediate at this point, see, we're very close to the previous highs of all time in the S&P 500. And back here, the intermediate signals and even the long signals back here were bullish also. They are not. They are neutral right now, which indicates that this is more like a bear trap. From wave 3 to wave 5, as we have it labeled here, you can see this green slanted line, which is a trend line marking how much we went from here to here. But if we look at the RSI, this is a momentum indicator. We see that where wave 3 came up here and made a high on momentum, the new high that we made last Wednesday did not exceed that. In fact, it was lower on the scale. So you can see we have a downtrend line while prices made new highs. Momentum failed to make new highs. This tells you that people are exiting the market even though new highs were made at the same time. So, and if we take this down here and look at it, hopefully this whole thing is on the screen. Yeah, there we go. Same thing, where we made the wave 3 highs right here and then higher highs over here. Here's where we made the wave 3 highs right where this crosshair is, and then the wave 5 highs last Wednesday were here. So this is definitely a downward trend right here, or a loss of momentum. This is what's called the MACD. If anybody's interested in what settings I use for the MACD, it's just the typical settings, 12.26.9. The RSI is set at 14. Now, So the S&P 500 should be in its last hurrah. The timing looks more like better, like when I started back in January. I predicted that it would probably be May that we would have the big downturn. That looks correct once again. I thought maybe back here we had already reached it, and maybe April would have been it. But you know how they like to just drag it out as long as they can, try to sucker as many people in as they can. But anyway, this is the S&P 500 update, and like I said, find this on the edge of truth. I'll put a link to that because eventually I'm just going to go there and do it. It's much easier for me to just upload to one place. So anyway, we've got this right here. Let's take a look at the precious metals. Okay, this is silver on a daily basis, and this is how I had it labeled. I'm not sure if it was the last video or video before where I stopped labeling. We were pretty confident we had completed a 1, and then we're looking for a series of 1s and 2s to have an extended third wave. Let me go ahead and update this for you. Okay, what we see now is that silver has played along with what our guesses are so far. 1, 2, 3. Now I'm expecting a back down. We've already had a little bit of back down last week. 4 and 5. Now, if our count is right, that would be our first wave 1, and then we would have probably a fairly good retracement back. But several significant things happened this week. One, we pushed through the $17 level, which is long-term support resistance. If you remember, when we were down at the 12 and 13 level down in here, I talked about we needed to get past 15, and when we did, we came back out and tested that twice, and both times it held, and we bounced off. Now, we would like 17 or very close to 17 to hold. We wouldn't want too much time below 17 before we head back up to wave 5. So we want this to be our new base right here. That would be ideal. Now, I accidentally erased the chart that I had here, so let me just state here that the short term is bullish, intermediate term is bullish, long term is neutral, and the long term is going to play into this right here. We are either at the green dot A, okay, waiting for an A, B, C down to 2, or we've already completed this and we are at the blue dot down here. What's the difference? The difference is if we are here at the green dot, then we will, for the next probably 2 years, or let's just call it 1.5 to 3 years, we should be working back up towards the old highs of $50. But we probably would not exceed them before coming back down again. And if that's the case, coming down to a C, we would exceed these lows most likely right here of 1360. We'd probably be going back down to the $10 to $12 area in silver before we did start this wave 3. Now, don't let this fool you here. This is a lot of time. This wave 1 was over a decade forming. All right. So the difference is if we are at 2, and I think there's a good indication that we may be, and the indicator there will be if the long-term trend indications turn bullish themselves, then most likely we have had 2 completed. Now, the reason why the switch between an A, B, C is because this A was so steep in its retracement from 1 that it is possible that wave 2 has corrected, because the wave A lasted much longer than it typically would have. Not necessarily, but generally speaking, it leaves it open to where it could be a wave 2 now. Now, this is good for old people like me because this means we're starting a probably 10 to 15 year rally right now, this wave 3. If not, then we've got another 2 or 3 years before we turn down again for another couple years, and then we would start the decade some rally. So I don't know how much longer I have to live, but I'm hoping we're at the blue dot, but I can't confirm that right now. What I can confirm is we are at least at A, so we should be moving up pretty rapidly and regularly now with pullbacks as usual. Pullbacks are healthy. You do not want sustained in any one direction. Something like this is really long sustained down. Right here, you can see that pretty much ended the down trend in silver and reversed it. So we had a nice bottom here. The intermediate term did turn bullish, so we can confirm that at least wave C is in, if not wave 2. So stay tuned for the long term to see if wave 2 is in effect. $17 again is the level we're looking at to try to maintain above that. I wouldn't want to go more than just 2 or 3, 4 days below the $17 level before we head up again. That would be healthy. Now, to tell if our count is wrong would be, I believe this is a third wave extension right here. In wave 4, it cannot enter the territory of wave 1. Wave 1 came right up to the $16 level. So as long as we stay above $16, our count is still valid. It's still maybe even below that, but we'd have to change this around a little bit. So we're looking good with our count, and silver, again, has finally confirmed. Now, here's something that's important too. Silver, for the first week, since everything turned back bullish at the beginning of this year, for the first time in a week's worth of data. So silver outperforming gold for the first week, 1 week's worth of data, has shortened slightly the gold to silver ratio, which was well over 82, 83, 84 to 1, and it's probably still close to that right now. And we've talked about how people could do some pretty good things. If you had 80-some pieces of silver, it takes that much to buy 1 ounce of gold. But traditionally, if we go back to something more normal, let's say 20 to 1 silver to gold, then if you had 80 ounces of silver, okay, and then that'll buy you 1 ounce of gold right now. When it goes back to 20 to 1, that means you can buy 4 ounces of gold at that time with your silver. So think about that. Again, none of this video is to be taken for financial advice or investment, as the disclaimer reads. So anyway, I expect silver now to continue, at least for a while, to outpace gold, unless something geopolitically happens, which is not good. And I still have that feeling that something's not good coming down the pipe here soon, and I wish I could get rid of that feeling, but I just haven't yet. We are due for a little bit of a turn down. The momentum, as you can see here, is positive on this, but on the RSI up here at the top, we are a little bit overbought right now. So this is perfect for a wave 4. Probably these wave 2s all down here have been the typical ABC. So I would expect this wave 4 to be more of a triangle type of formation, and then a break higher. So let's look and see if that's the case. At any time now, since we have confirmed bullish turns in gold and silver, we could have tremendous days because of, unfortunately, bad news. So anyway, let's take a look at this on a longer term scale. Okay, again, silver on a longer term basis, this is weekly. And again, we are either here, and I didn't put a blue dot, or here. So we're just going to have to wait and see on that right now. So again, I was estimating September of 2017 would be probably the top of B. Or if we are at wave 2, we've got a long, many years to go before we get up here. In any case, here was our decade-long trip up to wave 1. And we've either got an A, B, C down to 2, or all of this is wave A down. So we're just going to have to wait and see. You can see we're just at the beginning of the move. If you think you've missed the move, you have not. Look at this in context of, we're only seeing the end of wave 3 here, 4 and 5. Just look at wave 5 alone, which ran from, let's say October of 08 up until the spring of I'm sorry, is that even later than that? November 2011, somewhere in there, we had our $50 high. So look at all this trip up. And a lot of people they have that feeling, I missed the move. Look at this. We're right at the start of it. But I would say we're far enough out now where we can confirm that we are actually we've had a short-term bottom, and what I mean by that is at least that should be a bottom in that's at least for the next couple of years. One more comment I'll make on that. Some preliminary thoughts I have on this as far as where are we going. Has me right now, I'm trying to stay conservative with it. The wave 3 highs would be somewhere in the $200 to $250 range. That's very conservative, I think. But that's where I'm coming up with right now. Very early projections. I wouldn't hold any kind of water hardly at all on that. Just wanted to tell you where I'm at, and probably a $300 top at 5. That may be extremely conservative, might be a little bit liberal, we'll see. But that's where I'm at with it just right now. And last we have gold up here, and last we saw gold, we were somewhere in here, or very close to our wave 1 up here. Gold has been extremely predictable. Since we bottomed down here, we figured somewhere in this area right here, early January of this year, that we had indeed bottomed out, and we're heading back up. So since then, we've had a tremendous rally from about $10.50 up to almost $1,300. And I'm going to have to start putting the support resistance down on this chart. I'm not sure we are done our wave 2 retracement back yet, and here's why. And I pointed this out last time. The Fibonacci retracement hasn't even reached 38.2%. With wave 2s, you would at least expect that, maybe even deeper. But in any case, we just missed getting there twice. And when I count this, I can't count it to where it would work out to where wave C and 2 is complete. But I have not gone down, let's say, on a 4-hour chart to see if I could fit that in. Sometimes I can when I go down to the lower time periods and find out, where I'm missing a 1-2 or a wave 4 or something like that. Wave 4s in particular are hard to catch on a daily chart. So anyway, I'm saying that I think gold is still going to go down to about 1195 area to 1200, and then rapidly go up as we start a wave 3 up in that direction. So on this one, short and medium term are bullish, which indicates that this is a confirmation now that these are the lows. This is wave A or 2, same deal as with silver. Long term is neutral. If the long term turns bullish, then we will drop the A and say it is a wave 2. And again, that will turn this 2 to 3 year rally into a 10 to 20 year rally. Big difference. So I will end it there. It is still a rather quick update. The big thing is the big change coming soon in the S&P 500. Real quickly, oil has definitely bottomed, although it's due for its wave 2. It's had a wave 1 up, and now it's due for a wave 2 down. So we'll see if what oil does. But I believe the low we had in oil a few weeks ago or a month or so ago is probably the low for the rest of our lives. And guess what, guys? That is starting a wave 3. That was a wave 2 low. So a wave 3, remember we had crude oil in the $150 range. We are talking crude oil now probably several hundreds of dollars per barrel. So some drastic changes in the world would happen in lieu of that. Or the conditions would be causing that. I don't know which, but either way, that's not good. We're talking United States. We some places, I saw here in Arizona, we had under $2 for a gallon of gasoline. I think that is no longer in my lifetime will I ever see that. And I don't think it's going to be too long at all before we see $5 a gallon, and then $10 a gallon, and then $20 a gallon. It's really, really going to go up. We're talking as long as gold is on that multi-decade rally, that's where oil should be. Now, what does that tell us? That tells us that even though we've had deflation on most items except for food, your consumables have been going up. except for energy, of course. Can you imagine energy going up the way food has and healthcare has the last few years? It would have been horrible. Well, the horrible's coming because oil, energy, which also drives so many other things up because so many things are dependent on oil, shipping and different things like that. Unless we have an alternative ready, of course we have an alternative ready, but they're not going to give it to us, are they? No, the big oil's got to keep making their money. But anyway, things just aren't looking good, guys. TLT, which is the 20 to 30 year Treasury bond fund that everybody always thinks that we are, I remember somebody was selling a CD. I used to follow this guy. He was selling a CD, and it was, 2010, 2011, and he said for $100 he'll give you the CD, which will tell you within a month when the 20 to 30 year Treasuries were going to burst, when the bubble's over. Now, I don't think there's any doubt that Treasuries are in a bubble. Let me pull that chart up and show you that. Okay, what you're looking at here is TLT. That's iShares Barclays 20-plus year Treasury bond fund. It's a blend of 20 and 30-year bonds. And the way I see this Elliott wave here is we started a wave 1 here, and that came down to a wave 2. And now we are in a third wave, and that third wave is about to extend. Here was the wave 1 of wave 3. Look how big wave 1 of wave 3 was. Wave 2, and now we get our series of 1s and 2s, maybe one more, before we really take off. Actually, we probably will not exceed this low here. We could. This could be A, B, C, down to 2. But either way, the 20 and 30 year Treasury, although I agree it's in a bubble, not only is it not going to be bursting, but it's going to be skyrocketing sometime soon. And I'm also going to show you here the US dollar here in just a second. So I'm asking the question, what is going to cause this? This is a flight to safety. Now we're going to get a flight to safety this time, obviously, in the precious metals. It's already happening. You can see it's still happening in the... this is a weekly chart, by the way. I'm sorry, this is a daily. Let me switch to week. No, it is a weekly. Wait a minute. It's telling me daily down there. Let me see if I can update this. There we go. That makes more sense. Okay. 1, 2, 3, 4, 5 to wave 1. A, B, C to wave 2. 1, 2, 1, 2, 1, 2. I think the 3 is coming now. This actually formed a wedge pattern here, bullish wedge, and we have just broken out of that. Guys, I'm telling you, it's not going to be good. This means for the next 5-10 years, TLT is likely to be shooting up. Now, that means interest rates are going to go negative. So we're going to have that problem. Let me take you to something else here. Okay, this is US dollar on a monthly basis, and I don't know if I've ever shown you this chart. I think I have. I think I've shown this before. The US dollar was in a situation here where we had a wave 1 down here. This was during the financial crisis. Everybody thought the US dollar was going to break down below 72. And once I realized that the count was a wave 1 down, that was wrong. It was not going to break that. In fact, we should have had a pretty good rally, and we have. We've gone up back up to 100. Now, here's the question. In fact, I know I had this because I usually don't mark wave 4s unless doing a video, because I just they're the easiest way for me to recognize. I don't need to mark them out. But anyway, this tells me I did show this thing. Which way was this going to break? Well, we had a false break to the top outside of this little triangle, as you can see, and then it fell down. So have we completed the A, B, C up for wave 2? If we have, we are on a wave 3 down in the US dollar, which would probably take us, right now at 95.08, it would probably take us to the 50 to 53 area. That's a humongous drop for the US dollar. And if that is the case, again, we're looking at this two different ways. Are we looking at wave 2 has been completed, or is this wave A of wave 2. Like A, B, C for A, and then a B, and then a C, and then we fall off the cliff. Either way, the cliff is coming. But this is one indication of possible hyperinflation as well. That's all these trillions of dollars coming home to roost in the United States. We did have an overbought situation right back here, which should have told me, I didn't notice it, that we would probably break to the bottom side. But we had a little fake out, breakout to the top. The momentum studies down here, they're pretty equal. There's nothing really to say here. This right here, this Arun on the monthly chart is usually pretty good. You can see the bullishness is coming out of the market. If this red jumps up, then we would expect a big drop in the US dollar. Again, though, each one of these candles, remember, is a monthly candlestick. So if we're getting ready to start a wave 3 down now, we are in a heap of trouble. Now, I know I've shown this one before. This is the US dollar index on a weekly basis. Look how it came right up to resistance and stopped. Blue lines on my chart, blue horizontal lines are support resistance. I'll start filling this chart in when I start covering this more. 72 is a big number, which isn't even on this chart. But going over here, I showed you on the monthly how the wave 1 came down. The question is, are we working in an ABC up fashion still? Which means we will probably go higher than this 102 or wherever we've 100.72 where we've been recently. Or has wave 2 completed, which is now a distinct possibility. And again, the alternate is a dangerous count. It would be a dollar crash, where the wave 3, let's say it's 5 years out from now, would be about 52, less than or equal to 52 in the USDX. Now, it's hard for people to realize, 72 to 52 doesn't sound bad, but you know how bad the dollar has been devaluated since the Federal Reserve took over back in the mid-19 teens, how it's only worth just a few cents on the dollar. Well, consider going from 100.72 on the USDX, where we just were last year, all the way down to 52. That's half of what it was just recently worth. So however many cents are left, let's say it's 4 cents left from the original dollar, we're going to half that down to 2 cents. This is a severe, ugly crash. This is the kind of crash, wave 3s, where places like Argentina and other places replace their currencies. And we've heard talk about that, haven't we? Anyway, it's an interesting time to be alive and to be paying attention to this, because some strange things are about to happen, and they don't look like they're going to be good ones. A good one would be a break to the north here, and I don't think that's what we're seeing. That's the update for this week. Went a little bit longer than I wanted to. Thanks, guys. I appreciate your patience, and I apologize again for the break last week where I didn't get an update. I eventually want to try to get this down to where I am doing probably 2 a week. One where it's just talking more of a long-term basis. If you want to me to include something else to look at, I don't know. You just give me some ideas. I'll tell you if I can do it or not. And but set it to the edge of truth. I haven't been looking at mail, email, nothing the last couple of weeks. Again, a lot of personal stuff has been going on. But if you send it to or you make comments under this on the edge of truth, I will try to accommodate you the best I can, guys. So hang in there, take care, and until next time, see you later.